The broadcast is now starting. All attendees are in listen-only mode.
Good morning, warriors. Good evening. Good afternoon. How's everyone doing? Let's have a good day. Thank you, KT. Before we get started with some analysis here on the dollar, the Chop Fest, I just want to make subscribers aware, in case you're not, that the community, the member chat room, is very active. Joe Perry is in there. I believe sometimes Amanda is. I'm not sure. It's kind of late in London. But in the chat room, there's a lot of action. There's been a lot of price swings. At one point last night, S&Ps were down 24 handles. You had a lot of two-way action in U.S. dollar yen. So, it's good to collaborate with people. Most of the people that are in the member chat are pros. They do it to take care of themselves and their family. So you had some nice two-way action in the yen. It got hammered, but this resiliency in the yen, it's pretty resilient. You have to admit it. So we'll see. I know Blake was looking at 11 and a half. Okay, and you had huge moves in the S&P last night. You had these candles. Now we're trying to correct and find out if people should really be worried. But I wanted to talk about the dollar. It's almost a universal opinion. People think they're going to be able to buy it at 92. When I first started talking about this weekly potential head and shoulders formation, that we could get a shoulder down here, it looks like it should make sense. But the dollar certainly is not accelerating off this double top much, is it? So Monday I talked about the 78.6 level here. That it could hold. I think Steve had one more level lower, 93.47. So this was a good call. And then, I went with it for turnaround Tuesday call, said buy the euro. We had the dollar come off, the euro popped, but it was no trip to Hollywood. Okay. So, and here we are sitting right on the 50 day. So, if we don't hold right here and the Dixie starts to penetrate this resistance right here, it's about 90, 94 and a half, 80, would take it to 95.30, 80 or 20. So, I've always kind of been skeptical about this double top. Steve showed a line chart that showed that it did make another move, but from what I gather, this was a big day for Blake and his Canada trade. I think we get the news pretty soon, but having a hard time being short the dollar. Pound got hammered Monday, came back. I don't know. Kind of looks like a flag. So, majority opinion, embracing this head and shoulders. I haven't, and Grega never talks about simple formations like that. And even Grega talked about it. And, I think that maybe there's too many people looking for a right shoulder, and maybe this is the whole right shoulder. But I still think that there's a possibility, and I believe it's a minority view right now, that the dollar could blow off during this trade talk, trade up towards 97-ish. Okay, clear out all the dollar bears again. And I think that's what's going to have to happen to eventually get a correction in the S&Ps. Yesterday, talked with Steve about, could this be a stop hunt? And then Peter came on and he's talking 28. So, that could happen in the next couple of weeks. But it is still possible that what happened here has still not been resolved to the upside. And, NASDAQ's making new highs. Russell didn't even get to 71.80, still thinking maybe it will in the next 2-week period. But this could be setting up for a resolution like this, into August or September, something like that. So I can't get bullish the stock market here. Why is the S&P still 90 handles away? And do you think that they shook out every bear here in the S&Ps? I mean, I was looking for down here, I was looking for a rally, but 61.8. Okay, I wasn't looking for a complete retrace. So those are some of my thoughts. I thought I'd wrap it up with this too, with what's going on in the dollar. Can't wait to have a reason to be short yen again. I just don't think I have it quite yet. But look for this. Here's gold, the daily. Look, they do anything great. And look at silver. And the setup I'd like to see is silver make a new low, take out the 75 low, 15 cents away, and gold's $11 off its low. So if you see silver making a new low and gold is still making, not making a new low, that could be a decent reason to buy them both, but I'd stick with gold. Any questions on anything I've covered? You have some things to chew on here, guys. Be careful about being too bearish a dollar, looking for this right shoulder. Don't want anyone to have their arm amputated, trying to trade a head and shoulders formation that may not develop the way our imagination see it. Okay. So, Blake, Bank of Canada today, did they move?
Yeah, we have the Bank of Canada, and they are expected to raise rates today. So, as you pointed out a little bit ago, dollar Canadian is a little stronger. Canadian dollar is weaker. The market is expecting it now. One of the reasons why I wasn't chatting last night in the chat room is I actually went to go see a movie with my wife. The kids are over, the grandparents, and so I took advantage of that by going to see a movie. So I missed a lot of the price action last night, as far as what was happening with the tariffs. But but let's go back into the dollar Canadian. So the dollar Canadian, we tagged some resistance here, some previous highs from back in early July, just like a week and a half ago, and we have really key support coming in around 131, 130.80, somewhere around there. But the Canadian dollar is weaker going into this number. I took a third of my dollar Canadian longs off this morning. So as you guys know from a couple of days ago, on Monday, I was buying the dollar Canadian when it was down here at 130.80. So took quite a bit off the table, but I'm keeping a position. My biggest fear going into this Bank of Canada rate decision is the market is pretty aggressively short. So that is a bit of a risk, because if the Bank of Canada, which is expected to raise rates, but if the statement is dovish, I think the market is looking for a slightly dovish statement. There's a lot of fears between NAFTA negotiations, this trade war heating up. It would seem to be pretty silly for the Bank of Canada to be too hawkish, although Canadian data still has been pretty good. So if they come out and they're a little bit more hawkish than expected, the dollar Canadian could very easily trade back down towards this 130, 131, maybe even lower, back towards 130.50, and that I think is the risk, and also keeping in mind that the market is fairly short the Canadian currency. So obviously, if they raise rates, but they have a fairly dovish stance, the dollar Canadian will probably stay supported. The only way I could see the dollar Canadian really punching higher, meaning, you know, the Canadian currency weakens and the dollar Canadian really starts to break 132, 133, is that, you know, it's got to be a very dovish hike, or they just keep rates unchanged. If they keep rates unchanged, then, you know, the dollar Canadian's going a lot higher, a lot faster than any of us had probably anticipated. But the Canadian's trapped right now, and I think you know, we're talking 2 hours till the Bank of Canada rate decision. 2 hours from now, and then we have the press conference 3 hours, and I think 3 hours and 15 minutes from now. Let me make sure. We have the rate decision at 7 my time, which is 2 hours from now, and then the press conference, yeah, an hour and 15 minutes later. So it's going to be a pretty busy morning as far as Canadian goes. Like I said, I'm in a smaller position after this morning, but I'm still long the dollar Canadian because I am expecting, you know, higher prices. Now, there's a couple other things that are, you know, obviously, I guess we should talk about the elephant in the room, which is the tariff. So the U.S. has announced another 200 billion of tariffs on top of the 50 billion that's already in place. So that happened just as the stock market futures were closing yesterday, and you could see the Nasdaq. I happen to have the Nasdaq up right now. The Nasdaq futures came under pressure. Then we opened and we moved lower, and now we're recovering a bit. But you know, the stock market is still very resilient at this point, which you know. Frankly, I don't understand why the stock market is as resilient as it is, but it's going to eventually weigh on the market. Like these tariffs are going to eventually catch up with price, as far as it's going to eventually you know, weigh on sentiment, prices. And it's probably, like I said, it's probably gonna impact consumer sentiment at some point, which will eventually feed into the stock market. Now, you know, is it a month from now, 2 months from now, 2 days from now? I'm not really too sure, but the stock market is still very resilient at this point. I mean, we're at the highest. This is the S&P right now. We're at the highest levels that we've seen, you know, since following the announcement yesterday. So, and it looks like the S&P might actually hit new highs. I would assume, and let me take this off here. You know, I'm going to assume we head back up to like 2785 in the S&P, which is another, you know, 6-7 points up from here, because then you're going to squeeze all the late shorts out of the market, at least for this morning. So we might boost up a little bit. Now, as far as the dollar goes, we are very much range bound. The euro's getting a little bit of a lift here. Hold on. No particular reason why. I don't think. I didn't see anything. I'm looking other than futures moving higher. I don't see any headlines. Wow. Oh wait, hold on. Niddish says there's some headlines on the ECB rate hike, but I don't see them. ECB policymakers split on timing of first rate hike, meaning of through summer, says sources. So that is what's pushed up the euro. So just FYI, that's why the euro is spiking higher at the moment. They might take away through the summer. So the euro is just spiking as a result. Man, I had a little bit of a long pound dollar. I just took it off the table. Nothing, you know, I just kind of just took it off the table just to take advantage of the euro spike. I took advantage of the pound rally. It was small. It was nothing to write home about. So, yeah, Dale, did you see? I mean, look at this euro dollar spike. We went from 17.02. I mean, this is lack of liquidity. Headlines hit the market, and we got a little spike higher. I mean, that's all.
They got the stops over 740.
Yeah, right. That's exactly what happened, and just kind of worked some of the market that was short down here, expecting for the euro to maybe come back down to like 116.80, 116.70, and then just popped them and look. I mean, we're bouncing right back. It's that's why I took the pound dollar. I was long a little bit, just really small. I didn't even mention it to anybody because it was just like, okay, well, I'll just start nibbling down here and play in this range. And then it spiked up with the euro dollar. I just took it off literally for 15 pips, but it was so small that I'm, nothing really.
Not getting much of a response in the metals yet on that euro pop.
What's that?
Not getting much of a response in gold and silver.
Nah. I mean, they firmed up a little bit, but no, you're right. Nothing super exciting here. Hold on really fast.
Well, the yen still is fading from your area at your major trend line, even though it made a new recovery high. I bet went right to your line.
Yeah,
I just can't believe the resiliency of this yen, with the way the yield chart looks, and we were down 24 handles in the S&Ps, and it's really acting well when it really shouldn't with the background.
I look at this dollar yen too, and it's like, okay, stocks are, they're higher, generally speaking, and the dollar yen, I would think. I mean, here's just take the dollar yen here, and then let's just match it to the S&P, just so you guys get a good idea of like what it looks like and what it could look like here. I mean, here's the S&P, and notice how the S&P is just kind of. I mean, we're consolidating just like the dollar yen here, but we're taking off. The dollar yen is just, it's really lagging. So it's acting well if the S&P would eventually roll over, but at the same time, Dale, the S&P is not rolling over. You know what I mean?
Yeah.
The S&P continues to hold up. So, I mean, if the S&P continues to grind higher, the dollar yen is going to have no other choice than to rally. And, I sit here on the short side of the dollar yen, constantly, shorting it, trying to take a position short, make a little bit, and then reestablish positions. But it's very frustrating. It's an extremely frustrating position.
Yeah. I was doing that on the way up to looking at, when we had the sell-off in NASDAQ. I also thought the yen would come off pretty good. Maybe we need a breakout first, Blake. Just shake out every bear, get them out of the way, and it doesn't peak until risk peaks. And, maybe that's 2820 in the S&Ps.
It could be.
What our gal said yesterday.
I mean, it could be. I mean, you look at the S&P, and I mean, it continues to hold up really well. The one thing that I guess I should point out, and if you use ForexAnalytix, you kind of knew this going into this like whole tariff thing. We had this false breakout, and this is a long upper shadow doji, which tends to give us some bearish price action, and that's kind of what we've got right now with the S&P currently. So a little bit of a false breakout. This 2800 was trying to, we were trying to get up there, and we failed yesterday because of the headlines that came out late in the day. But
so we take out the stops on the beginning of your red line, just a shade over 2802. And maybe go to your 1.27 level and look for shorts. Anyway, that's what I'm, imagining.
Yeah, that's possible. Though I would have thought that more. I thought that I was kind of in the same line as you, Dale, yesterday, until we did this false breakout here.
Okay.
And then now I'm kind of questioning will we even make it all the way up there?
Yeah.
And you know,
Good to question.
What's that?
We always have to. It's good to always question ourselves.
Yeah,
All the way through the process,
It is, and you know, you always got to think, okay, where's the market position? What are they thinking? You know, where are they wrong? You know, all those are questions that you and I and everybody should be asking whenever we're trading the markets. You know, I was chatting with my wife, who, you know, for those of you that don't know, she's a small business owner, and she owns a company called Birdie Tell. I think a lot of people already know that here that have been around me for years. And she is a very big advocate of listening to podcasts. And she was listening to this podcast with Tim Ferriss, which is like one of the people that she loves to listen to. And he interviewed Paul Tudor Jones, and she was telling me about it yesterday, which I'm going to listen to it. But Paul Tudor Jones was like, I only take positions in the market when I can make, 5 times my risk. So it's basically a risk reward of 1 to 5, because that allows me to be wrong 4 times, and he goes, and I am wrong. So, only taking on positions where I have a risk reward of 1 to 5 is where, is what I do. And I thought that was really interesting, because, you look over here and you go, okay, well, if I'm on the short side right now, what is my risk reward? And I talked about risk reward yesterday. You can say, well, if I shorted right now, my risk might be here. My risk might be here, and I'm risking 1 to make how much? Well, if we make it all the way back down to 26.90, then I'm risking 1 to probably 1 to 4, 1 to 5, somewhere in that neighborhood. That's good, but you got to let them play out. I mean, if you're gonna let them play out, you got to try to be more diligent about letting your trades play out. But always taking on a good risk reward makes the most sense, and that's why I look at the dollar yen, and I still view this as a very, very good risk reward to being on the short side, because look, your risk is let's call it 111.55, 111.60. So what are you risking? 30, 40 pips from here to make what? If we make it down to 108, or lower. I mean, you got you've got that risk reward set up. You may be wrong. You may get stopped out, but you're taking the right trades based on risk reward, and I think it's a very valuable lesson. That's why
I do too. It's great mentoring. Look for markets that are either good or bad from a critical point in the market. Basically, it's what the kind of trade it is. It's either good from here, and if it isn't good, it's going to fail. So critical points to where markets can confirm something soon.
Right. Yeah, exactly. So, and anyway, we got here in just a few short minutes. We're going to have producer prices. It's tomorrow's CPI is going to be more important, but still PPI is something that we should be paying attention to, and data that is coming out. So, just keep that in mind. Hold on really quick. So that's going to be like, some data that's going to be released. I guess I should go over to the euro dollar really quick. Euro dollar is very messy. I have no bias on the euro right now. I do have to state that I still think there's a big double bottom setting up in the euro dollar, which could eventually mean a lot higher prices in the euro. But I'm not seeing anything right now that is giving me that good risk reward setup. The pound, same thing. The pound's just kind of sitting here. I do think that the pound is holding up relatively well based on the uncertainty that we're seeing around the Brexit negotiation. So, the longer we hold up here, the more risk it is for a continued rally in the cable. And the Aussie dollar has been kind of weak, but we're getting a little bit of a lift right now off the lows. Again, not a whole lot to do here, and the Kiwi dollar is setting up in its inverted head and shoulder pattern right back at the neckline. So I mean, if you guys want to be long, it's a good risk reward to be long the Kiwi at current levels, in my opinion. I'm not long. I'm just stating that. And the dollar Canadian, obviously, Bank of Canada's coming up here in the next hour and a half. Swissy, we're right back up towards this triangle resistance. Very, very messy markets held up by the 618. Capped by 99 cents. Not a lot to do here. And here's the dollar index. The dollar index is still holding up really well on this in this channel, but we've got this big double top looming, and I think if we break through this 93.70 level in the dollar index, I'm going to become quite bearish the dollar near term, and that's pretty much it. And the dollar yen, again, it's just knocking its head up against this long-term multi-month resistance level. It's pushing right up against there. I do expect a failure, but again, stocks have been very resilient. We're going to have to see some continued weakness in the stock market to see some downside pressure in the dollar yen, in my opinion. So, anyway, very, very choppy markets right now. I don't have a lot of bias at the moment. So I'm going to pass it over to Steve if he's here. Good morning, Steve.
No, I'm not. Good morning.
Good morning. How are you?
I'm good, mate. How have you been?
Good. Yeah, we got producer prices coming out in a little bit. Bank of Canada today. Obviously, the next World Cup game. So the market's going to be on pause in about 4 hours, five hours from now, I guess. Yeah. I mean, that's pretty much it. What are you seeing out there, Steve? How do you feel about this new list of tariffs that are being imposed?
First of all, have you had a look at the list of items included?
No, but I got it via email this morning, and I was going to read it here in a little bit.
Yeah, I think it's worth reading. Not to begin with, the first list of things that actually the US is imposing tariffs on, having to do with being imported from China, and the opposite list that China has imposed tariffs as a response to the first list of tariffs that the US imposed. So I have two comments to do about that. One, it's really worth noticing what kind of items the US is putting tariffs on, and see what kind of items actually the US is importing from China, because you're going to get a very different idea of who is exporting actually.
Right. Yeah? A lot, like we were just discussing about like some of the fish that we're importing from China, so that we eat.
It's actually not only that. You should see how many high quality, high technology products the US is importing from China, and how fewer those exported from the US to China are, which makes you think twice. And the second thing is that in the second list that I saw yesterday, one item that actually attracted my attention was apparel. What I'm trying to say here is that, one way or another, the list of items has started including items that will really affect the disposable income of the average of the average American, right? And will definitely also have an impact on the CPI.
Oh yeah.
So especially if we do see an impact on the CPI, which should happen, that's probably going to be another reason why this trade war might end up being negative for the U.S. economy, and definitely negative for risk. Because
by the way, Steve, I hate to interrupt, but PPI is coming out in 20 seconds.
Let's have a look at it.
Yeah, PPI, we're expecting a 0.2%. Prior was 0.5, and I'll read it to you as it comes out.
I have used the yen up here.
Yeah.
Oh, that's strong.
PPI 0.3, so it's a little stronger than expected.
Final managed 0.3. Insurance services increased 0.4 and
hotter.
goods advanced 0.1. Yeah, a little bit hotter. So, another, actually CPI or PPI print that beats expectations. And especially if due to the tariffs we have a CPI running even hotter, that's definitely going to affect the Fed's decision about what to do with rate hikes. Now, the thing that you asked me, what has attracted my attention? One is copper, right? Copper is imploding,
which is
since
really, really weak.
Yeah, it looks like the Shanghai. Looks exactly like the Shanghai.
Yeah,
Shanghai
we still have
FXI,
some distance.
Yeah.
We still have some distance until we actually complete the double top target, which is down at 256. Today we hit a confluence of supports here at 273. But definitely this is one thing that is that has my attention currently. The other one is the USD Chinese yuan, because it's exactly actually as we drew it a few days ago in the webinar. It came lower. I think this is the textbook ABC correction, if you see closely. And as it seems, we found support at the previous support resistance area and we're shooting higher. It looks like it wants to push to new multi-month highs. I mean, the last time we were up there at the previous high was August of last year. So it looks like the USD CNH wants to resume higher. And another one that I know is not so important for the general market, I just want to warn people, the Turkish lira is imploding once again. It seems to be breaking above the triangle we're tracking. So I do believe that the USD Turkish lira is going to be pushing the 5 handle sooner rather than later. So those are the things that are actually have attracted my attention. And one more is, and remind me, Blake or Stelio, we have inventories coming up for crude later today, right?
Because that's correct. Yes.
Yeah, we do.
Yeah,
because it's a half an hour after the Bank of Canada, so exactly 2 hours from now.
Yeah, because crude seems to be consolidating near the highs. This looks, for the time being, either like a triangle or a bull flag. Depends on how the price action is going to play out. So I'm paying close attention to it. If we do see a daily close below 72.80, I think that we might get a deeper pullback. But unless we do so, and if the data help to see a breakout, I do think that we're going to be headed to the next target, which is this confluence of resistances up here, which is roughly at 76.50. So, for the time being, another push to the upside looks likely to me, but I do think that the rest of the day is going to be interesting to determine what's happening here with crude. So those are the things that I'm actually monitoring. Obviously, the Aussie and the Kiwi have suffered due to the risk of environment, what's happening with copper, and of course, all that is based on what's happening with the tariffs. So we have seen a continuation after the rejection we got just before reaching 75 cents area in for the Aussie, and same deal with the Kiwi. We almost made it to the previous area of support at 68.50 to 68.70. We seem to be pushing lower from there. I think that as long as we respect, I said it a couple of days ago, as long as we respect these first areas of resistances, both for the Kiwi and the Aussie, we have to respect the prior trend, which is definitely pointing lower. The next downside objective would be, in my opinion, and the nice confluence of supports for the Kiwi, would be at the 65-cent area. Now, having to do with the euro and the cable.
Hey guys, I'm gonna have to duck out. Have a great trading day today, and good luck.
You too,
Thank
Blake.
you, Blake. See you later. And
thanks, guys.
Okay.
Hey, Stelios, and have a great day, guys.
Bye-bye, mate. Stelio, by the way, Canadian, having to do with Canadian data, we are certain that we're getting a rate hike, 25 base points.
Well, it's not certain, but it's almost priced in. Yes.
Yeah. So it's going to all be about what kind of language we get along with the rate hike, right?
That is correct, sir.
What do you expect?
It's a tough call. Okay, the hike is happening. I think that's pretty much a given. Now, in terms of everything else, there are a few. There are a few items where Canada might have problems, which is the usual, no progress at all in NAFTA. Oil, okay, oil is doing well, but it's kind of stuck near $75 where it is. And data has been coming in hit and miss. So I think, the last few times that they've been, that the Bank of Canada have been talking about future rate moves and all that, they were a little bit hawkish a few times, but they've also been quite conservative sometimes. So I think unfortunately it's going to be a bit of a nothing. So they're not going to be hawkish or dovish in my opinion. So what's the market actually pricing after that? I don't know. I have to go and look at the OIS market.
I have to tell you that I wouldn't be surprised if we got dovish language. That's not going to be the first time anyhow. So I'm not expecting too much having to do with possibility of hawkishness. My intuition tells me that there is a bigger chance that we're going to get some dovish rhetoric if the statement is not completely neutral. That's my point of view, but I'm not actually taking a position based on that, right? I'm just giving my insight. I have no position in the USD CAD. Since we were talking about it, let's have a look at it. What remains to be the case is that I was looking for 130 as a very nice confluence of supports, and I still have no reason to not believe that we're getting there. So I like 130, and if 130 is tested and then we see a reaction, then I might get involved. And until that happens, I'd be sidelined for sure. So if we do see Canadian strengthening, so USD CAD pushing lower, I would be very, very closely monitoring this. This is actually a triple confluence of supports down at 130. That's what I'm watching for, and I would be very interested to see if we get there, and if we get there, how the market is going to react. Now, having to do with Euro USD, Blake said just a while ago that he's neutral here. More or less, I'm neutral here as well. Why? Because in the short term, we are seeing the Euro USD holding very nicely up here. I mean, we had a hammer yesterday. So far today, we have an inside hammer. So, everything looks like, especially if you go down in lower time frame, you'll see that this is some kind of a consolidation here. Doesn't look bearish at all for the time being. But on the other hand, this descending trend line is still holding. The 23.6% fib is still holding. So, and since we have some strong resistance at 118.50, 118.30 to 118.50, there is no reward to risk ratio to buy it here, because even if it breaks higher from here, it might get rejected from 118.50. So, price action tells me that there is a good chance that we're going to push higher once again, but I don't have the reward to risk ratio to be involved at the moment. Same deal here with cable. Cable seems to be consolidating just below the 133 area. For some reason, I would actually feel better if I had to buy one of them. Actually, that would be cable, because we've already seen a break above this descending wedge, and I very, very much like descending and ascending wedges as reversal formations. So this gives me an extra incentive to be looking for cable to be a better opportunity for a larger rebound. But other than that, unless we clear the 133 area, I remain quite cautious as well. I wouldn't be that much surprised if we pushed lower once again from here. So, I'm sidelined here as well and just monitoring. Keep in mind, it's not by accident that you see many choppy ranges and choppy technical setups. It's textbook summer trading, and if you put in the mix the World Cup, which makes it even more of a summer trading kind of condition environment, it is to be expected usually, and you'll notice that very often you need liquid markets to have clear technical patterns. So, you have to keep that in mind, that during these times of the year that we have that kind of a trading, you need to be more nimble. You need to be more patient, and perhaps you need to take smaller positions and use larger stops simply because technically speaking, the market is not behaving that well, and this is a reality we have to deal with. Now, having to do with risk, yesterday, after we got the tariff announcement, etc., late at night, I mean, so it's in essence today's candle. Obviously, we got a strong move lower for the S&P, which has almost completely been retraced already. So we went all the way down to 2764, whatever it was, and we've now almost completely retraced the losses. This is not the first time we see such a resilience, which doesn't make much sense. I mean, okay, the market is well bid, fine, but definitely that's not positive news. So, why aren't we getting any negative response, or anyhow, it's very short lived. But you have to trade what you see, and what we have in our hands at the moment is that the market has broken, having to do with the S&P above this descending trend line. It almost made it. Actually, somebody can already start talking about the double top. I mean, we almost made it to that high, but we surpassed intraday this high that we had in June. We almost made it to the high that we had in March. I think that, no matter what the news is, you have to respect the potential for more upside as long as we remain above this trend line. Now, if we slip down below it, I would still remain neutral in that case, as long as we hold above 2690. So only a break below 2690 in the S&P would actually turn me bearish. Unless or until that happens, I'm not going to be jumping the gun talking about double tops, which potentially we could have formed one in the S&P, one in the Nasdaq, but I really consider this jumping the gun. IWM almost did the same thing, as you see. Now, having to do with indices, though, I have to say that the situation with the DAX and the FTSE remain quite more clear. We rebounded from a confluence of supports that we had indicated at 12,100. It was multiple supports confluencing there. And, yesterday and the day before yesterday and the day before that, I was saying that, listen, watch out, because this was a double top with the range being 12,600. So watch out, because 12,600 can actually act as resistance. And indeed, 12,600 acted as resistance. We got a major rejection from there, as you see, and we came all the way down to retest the 12,400 support resistance area, which for the time being is holding. But as long as 12,600 is holding, you have to respect the potential for more downside. Okay. So in my opinion, there is a clear reward to risk ratio. If you want to be short something, I think the DAX is a good opportunity. The FTSE also, I do believe that the FTSE is consolidating in what will prove to be a bullish consolidation. So I do believe that the FTSE is going to resume higher after all. But the fact that we got rejected once again from this descending channel opens the possibility that this might be a more complex correction, right? Anyhow, we tested support today; it's holding. So we might even move higher from here. It's not impossible that we're going to do something like this, but definitely I would remain cautious as long as this descending channel is holding. Okay. If we do break lower from here, I would be looking to find support once again before moving higher. Anyhow, between all these indexes, I think that the DAX is by far the cleanest at the moment. Nikkei, we had a discussion about it before in the chat room as well. Nikkei, for me, the situation was quite clear as long as we were stuck between 22,000 and 23,000. The rejection from 23,000, opened the door for a retest of 22,000. A break below 22,000 opened the door for a move down to 21,000 to fulfill this double top target, but we never made it there. We actually, pushed higher. We came back in the range, and although I do see the potential for more downside from here, technically speaking, it's not that easy to read at the moment. I mean, there are multiple interpretations. So actually, I wouldn't be trading it at the moment. As I've said, I wouldn't be trading the USD yen. If you really want to do something about the USD yen from a reward to risk perspective, obviously shorting it here, believing that this double confluence of resistances at 111.50 is going to hold makes sense. But I'm not all that convinced. So I'm just, monitoring and waiting for it to finally do something decisively, either break above and accelerate or get rejected. But, some kind of a rejection that's going to make me feel confident that, this is actually, another leg to the downside that's beginning. Until that happens, I'm just an observer here and not a participant. And, no regrets whatsoever about that. Now, let me have a look at your questions and see what you want to have a look at. Okay, question about the DAX, that's covered. Wimbledon also starts to get interesting at this point. Yep, Nick, you're absolutely right. That plays a role as well. Steve Amanda wants me to tell you that there are no 150 pip moves during the summer. Yeah, there are, but yeah, they're not frequent. 100% agree on that. Why Aussie is the weakest? Simply because the Australian economy is very highly correlated to the Chinese economy, and the Chinese markets are suffering at the moment as a result of, the trade wars, etc. At least the expectations, I mean. So that's the reason. Now let's have a look at the metals. I have a friend asking here for gold, but I think it's a good idea to have a general look at the metals, and then we can have a look at some cross rates. I said yesterday, I made it very clear, as long as gold does not close above 1260 on a daily basis, you need to respect the potential for more downside. I would be looking higher only if we close above 1260. We haven't done that yet. So you need to respect the potential for more weakness. Same deal with silver. Actually, if you look at it, silver broke lower from a very long-term triangle. It came back, it retested it, and it seems to be pushing lower. Of course, this 1570 area is holding as horizontal support. So, you can be clinging to that, hoping that we're going to see a rebound, and we might. But for the time being, and as long as we remain below 1620, you need to respect the potential for more downside in silver as well. So, both silver and gold don't look good. They still look very heavy. Technically speaking, there is absolutely no reason to believe that they're moving higher, not unless they clear some resistance areas. And that is that. It's as simple as that. And if you want me to add to that, I started by it, but copper is definitely breaking down. Just look at this move in copper. Copper has moved 18% lower. Oh, sorry, I didn't actually. There it is. So copper has moved 18% lower within 24 trading days, right? So copper is getting destroyed. Palladium, which I wanted to show, palladium, and no big surprise here because this action was clearly showing to be a consolidation. With a different color like this. Palladium seems to be breaking below a pennant, and at the same time, because this is very important, at the same time breaking below a very long-term ascending trend line. So, palladium looks to be in a bad spot here. Next target is 900. And platinum, made an attempt for a big recovery, but, for the time being, it's failing once again. So definitely platinum remains under pressure as well. So metals don't look good, right? There's no question about it. A lot will have to happen for metals to start looking constructive once again. Until that happens, you need to remain cautious, and be very nimble if you're trying to trade them counter trend. Now let's have a look at cross rates. I was looking for a rejection, and I want to start with the Euro-Aussie. I was looking for a rejection from this level up here and a push lower, and that actually happened. Also, if you sit down on the 4-hour chart, this was a very nice potential head and shoulders formation. Just look at it. Right? The problem being, though, that we found support and are pushing quite strongly higher towards this resistance once again. Bottom line, this is starting to look like a consolidation. So let's delete all that. We can use this line. This looks more like a pennant. Breaking higher now than anything else. And considering the strength we're seeing in this candle, what we're likely going to leave behind today is a morning star formation. So obviously, ultimately, it's all going to be about this 158.80 area because it's an area of resistance. But if we do break above it, I think that we're headed back to 160.150 because, in retrospect, now that we've seen this big move higher, this looks just like a consolidation, and one more leg higher is likely. Anyhow, we're just testing resistance once again. So obviously buying it or on a resistance makes no sense. But I'm telling you that it doesn't look good to be bearish after today's reversal. Same thing with the Euro Kiwi. Euro Kiwi is holding this megaphone formation for the time being. But the move lower found support at the horizontal support. We're seeing a big candle higher today. I would be looking for resistance once again in this megaphone formations resistance. But I have to say that, the Euro Kiwi is holding out nicely. So, the potential for one more leg to the downside that I was expecting seems less likely. I'm not involved with them, but, regardless, I'm monitoring them. I haven't felt yet confident enough to have a position in them. But to be honest, I was looking lower today's reversal from a technical perspective. I mean, I'm not surprised by the fact that we had this reversal because this reversal is the result of seeing weakness in anything that is correlated to China. So obviously seeing Aussie and Kiwi move lower is no surprise. That caused the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi to get bid. But I have to say that what looked like possible nice rejections is looking now like consolidations about to break in the direction of the trend. I think the Pound Aussie looks even better having to do with that because this simply looks like a bull flag. So if we break higher, I would be looking for equality from this move from the first leg higher to the second leg, right? Regardless, first area of resistance 180. Why? Because it was ranges support here, then it acted as resistance. So I do think that 180 can play a role once again if we actually breach through the 179.50 area, which is the resistance we're currently testing. And finally, Pound Kiwi. Here it is. Same deal here. We got a move lower after getting a rejection from this ascending wedge. So, nice rejection opens the potential for more downside. But we're seeing, yesterday we got an inside spinning top, which showed that the downside momentum had stalled. Today, we're now seeing some follow through. So initially we were seeing momentum stalling, and now we're seeing some bullish momentum. Given the fact that we came higher from a move that's actually quite strong, it tells me that there is a good likelihood that we're going to actually breach through this previous high that we had a few days ago. So I do think that as long as we now hold above the 50 DMA and this low that we had 2 days ago, seeing a push to new highs, or at least retesting that high, is a decently high probability, right? Coach, do we have an interview today, by the way?
We do, Steve. We do. And Nick Santiago from In the Money Stocks is with us.
Okay, perfect.
Jens putting in a pretty negative candle right up here. I know Blake was talking about it. Just wanted to alert the community.
Yeah, I'm going to say it now. I covered Nifty yesterday for our friend that's asking, and I have to tell you that Nifty has broken above this triangle. So yeah, as long as it remains above it, it looks good. Let me have a look at the USD yen. USD yen, yeah. And if you remember, Coach, I was saying just 10 minutes ago that, if you want to do something with the USD yen, anything, the only option you have is being short just from a risk reward perspective, right? Because honestly, buying USD yen when it's banging its head on such a critical resistance makes no sense, right? I mean,
there are also a lot of non-confirmations on shorter-term TFs when new highs were made, so momentum was waning on each additional new high.
Yeah.
Waning. I'm waning a little bit longer to do my interview.
Let me say something about the S&P. Something that would turn me somewhat negative in the shorter term is the following. I know that we pared back most of overnight losses, right? But if actually, now that the market is going live, if actually we push to the lows once again and we close near the lows, then we're going to have an evening star formation. And then, the possibility of a double top will start looking like a potential. I wouldn't be jumping the gun. I want to repeat that again. But definitely the first step, if you want to be bearish, is that you would not want to see the market completely shrug off yesterday's event and closing almost unchanged or barely negative. So if you want to be an advocate of the bearish scenario, we need to begin by seeing a daily close at or near the lows, the overnight lows. Okay, that's a first important step. Until that happens, I would just remain extremely cautious about risk. Coach, I don't know if you've seen, but for many people that are wondering why the market is staying so well bid, irrespective of the fact that we know that the BOJ and the S&B and who knows who else are buying outright stocks, ETFs, etc. We've had an all-time record during the first semester of the year in stock buybacks from companies. The astonishing amount of $680 billion of buybacks just within 6 months.
That's a tax cut.
Absolutely affected by that, for sure. A big part of the tax cut is actually going back to stockholders in the form of stock buybacks, right?
Yes. Yeah. No, they didn't raise any salaries for their workers. They may have thrown them a bone. Go ahead, Stella.
Sorry, I was just going to say, when the board's compensation is directly linked to that year's performance, what do? Buybacks? No.
Yeah, you have even more incentive actually to buy. Yeah, exactly, to buy back your stock. Exactly. So
what would overwhelm buybacks?
Say again, Coach. What did you say?
What could overwhelm buybacks and the so-called the narrative of the supply of stock issuances diminishing because of buybacks?
The thing is, how do you finance buybacks? either by debt
Exactly. Debt.
or
Debt.
so basically
Okay.
much higher rates will stop
Exactly.
this.
We know as a
Great
fact.
point.
We know as a fact that many companies take on debt, cheap loans to issue stock buybacks. So everything is aligning when actually the market.
So they're buying back their own stock on margin, kind of.
In a sense, I mean, they're taking
There's a
on
loan
debt.
against it.
Yeah, they're taking on debt to buy back their stock, and at some point, at some point, this is going to be the perfect storm. You understand why? Because when this whole thing reverses, then the same companies that are actually doing buybacks, they will have to be issuing new stock to finance their debt. So you understand that eventually it's an inevitability that not only this is going to end at some point when we get to the next recession, but it's going to also reverse. So at that point, this is going to affect even more to the downside the market forces.
Interesting. A great discussion. Good question, Dale. Great discussion. I knew you guys would know.
Great question.
I'm in, I get to have great discussions with you guys and Blake every day. This is going to be another great discussion with Nick Santiago. I haven't talked to him for a few years, so why don't we get that underway, everybody? Stick around for Nick, and thank you, Steve, for your rundown. I don't even interrupt you anymore. You're running like the ever-ready battery, and I let you get it all out. I want it to be cathartic for you when you do your analysis.
Enjoy the interview, and see you tomorrow.
All right. See you later, Stel. Okay, Nick, I see you. Okay, buddy. My Trading Warrior brothers, Steven Stelios. So, Nick, I'm making you the presenter. I'm not sure if you're going to be screen sharing some of the things that are on your radar. You are.
Dale. Hopefully
Nick,
you can hear me now.
Can
How
hear
are
you.
pal?
Got it. It's been years.
It's been a while.
Yeah, you sound the same.
I feel good too. How about yourself?
Okay, buddy. So right away, you want to talk S&Ps. Everyone, I've talked to Nick before. Nick, let me check on my memory. I mean, you know Gann stuff. You're really a student of cycles, and you're a trader too. So
that's right.
Why waste any more time just jabbering? Why don't we get to the things on your radar and what you're seeing here?
Yeah. So today we're waking up to, well, not really waking up, but yesterday after the closing bell, we got some news on additional Chinese tariffs. Everybody knows. And you see here, this chart of the S&P that we dipped a little bit. And now the market have recovered again. And we see this theme over and over and over. I still think the remainder of the year will still remain just like we've been since January. Very, very choppy.
Range bound?
Range bound till the fall, and then you get another big rally all the way up. I mean, the bottom line is this. I know I don't like to talk politics, but Trump is winning this war, believe it or not. Even though you have all these pundits coming out, he's going to get this done, and I'll show you exactly why. And it really has nothing to do with the S&P. And if you don't mind, I'm going to blow this chart up a little bit of the S&P, and I'm going to move this over, and I'm going to show you a chart of the Shanghai Composite.
Yeah. Oh yeah, they're losing the battle.
This is it. They're losing the battle, and basically, when you look at this chart right here, this says it all. And this is a monthly chart, and this is where the Shanghai is going to go, right to around 2,500. And once it goes to 2,500, you're going to see the Chinese are going to say no more, and they're going to resolve their issue, and they're going to come out and they're going to put rules in place against intellectual property, because that's really what this is all about. Intellectual property. It really isn't about trade. Trade is just a tool that they're using right now, because that's what we really have. We have a trade deficit with China, and he's going to use that. So here's the deal. When this gets down to this 200 period moving average on a monthly chart basis, which is right around 2,500, that is when it will all end. And it'll probably end sometime in September and October. and then the Shanghai will start to move back up. Trade war will be pretty much over, and the markets are going to move back up.
And you're thinking by September, October in there.
Thinking September, October probably does the trick.
Okay. What cycles are those? That time frame based upon, Nick? I know that you follow cycles, so is there some type of Gantt time cycle?
Yeah, there are. So
there?
if you ever look at the markets, what you're going to notice is that we've always put in 2 months of the year are usually the most volatile every year. It's March and October, and we often have a September move as well. And you know, we could go into it for hours why that happens, but you know, just historically speaking, we all know that most crashes occur in October. They also happen in March. I'm not expecting a crash this year at all, but I do think that we put in some kind of a low for the Shanghai Composite in the month of September and October, probably more towards the latter part of September, early October. And then it's over. And once we get to around this 2,500 level, maybe give or take 50 points either way, I think that it's all said and done, and then the markets start to move higher again.
Maybe just back to the breakdown at 3,000 before another move, but at least you could count on some type of relief rally at a minimum, right?
Yeah, well, I mean, you're gonna probably, well, we should expect a very good solid rally into the holidays, but okay. I think for the time being, you know, going back to the S&P 500, and I'll just use the spiders for that. If you just look at a daily chart, you'll see that we put that top in January. We had a really rough March, and then we've been making some higher lows here. But if we take out this pivot, we come back down and test, you know, maybe 260 area. I don't see us breaking down below that, though. I don't see the market breaking down below that. I think this is just one big wedge, and we're going to just trade in a very, very range-bound manner, really into the fall. And then the fall, we get a blast-off move to the upside.
All right, let me ask you, within the context of that, you'd probably be looking to buy weakness if we get weakness into that time frame. What sectors are you looking to use any weakness in the market to get into? Do you like the oils because of what's happening with energy? The miners still look crappy to me. What sectors in the market do you think will be the leadership? Semiconductors have been struggling. Where are you focused, Nick?
Well, I'm gonna go into a couple of different areas. One area I will not be in will be energy. So we'll get into crude oil in just a moment, but I don't like crude very much at all. I think crude only has maybe a few more points in it before we get a top there. So I don't like energy, but one area I do like is the airlines. So I'll be watching all the airlines, Delta Airlines in particular. I think that's a chart that we can watch, especially if we can get
back and fill the gap during the next rally.
Yeah, if you can get a stock like this, watch this. Well, look at this weekly chart. I mean, if you could get this thing down to around 45 or even a little bit lower, I mean, that's a home run for these stocks. Bigger picture, these charts look very, very strong still. So, you know, right now, this is what I call the ultimate buying opportunity, because you get to really go and get your shopping cart filled up when you get to the fall season. So,
and that theme of perhaps a peak in energy prices is going to play into, because that's a major cost for airlines.
Absolutely. That's probably the biggest catalyst. These companies have all been restructured. Their financials are in order. I mean, they're better. And check this out, Dale. You'll appreciate this. If you take a look at just a regular Fibonacci retracement, and I'm going to just take it from the 2016 low, and I'm going to use Delta because I believe that's the leading airline out here. You can own this thing at around $43. I mean, this is a no-brainer. I mean, that's what traders do. And, you know, the upside on something like this can easily be back to, you know, $60. So that's because the bigger trend is in picture. And, you know, a lot of times what I find when we go through periods like this, where you get these real choppy sideways markets, a lot of traders lose sight of the bigger picture. And, you know, even though you have these corrections like we've seen in Delta, between 2015 and 16. Don't forget, that was where the stock went from basically $50 down to 32. You get something where the stock goes from $60 down to 43, you're still making higher lows. And that's a bigger picture move. And that's where you make big money. So I think the airlines are one area where I'll be looking at. Delta in particular. American Airlines also is in play. I already own call options on this one. As I just like the retracement already that it's made. If you just take a look at that, and I'll push that up for you, what you'll see here is that we were at the lows there, and look at that beautiful 618 right now, and that was a nice breakout there. So I think this is one. Yeah, I just own longer term call options in this one at the moment.
It's incomplete too. It's only got 2 drives up there at the top. Nick, I've been asking a lot of people this that have come on Face, and I say that the most embraced market narrative out there is that the bonds are in a big bear market, and as of late, rates have softened, and we're getting closer and closer to an inversion of the yield curve. I was wondering where your head was at on this.
Well, I'm in the camp that I always let the charts tell me more. So right now, you're going to see this is a chart of the 10-year U.S. Treasury note yield.
Got it.
And you have 2 symmetrical moves taking place here. So you can see this first move up off the lows, and we went. Now you pulled back. So the next markets love to repeat what they've already done. So the next repeated move would take bond yields up to around 331. I am in the camp that I think we are now at a point where we're going to see higher rates. I do think that's coming. It's just not coming fast, and it's not going to come quick until we get into probably 2021, 2022. Then I think we're going to see bond yields really start to move up quick. But at the moment, we're just putting in a consolidation.
We're in kind of like a sweet spot.
We're in a sweet spot, and that'll probably last a couple years. There's nothing to say rates are going to go soaring higher, even if the Fed raises a quarter point every quarter, which is kind of what they've forecasted. Look at what Europe's doing. These guys can't raise rates. I mean, Europe's a mess. That's probably, that's a disaster waiting to happen.
All right, good. You brought it up. When the sweet spot ends, and it sounds like you're pretty sanguine for the next couple of years. I've heard, be sanguine until the end of 2019 by some, market, astro guys and things like that. Do you think that the epicenter this time is going to be Europe? So that's going to spark the next problem in the global economy?
Yeah, I think it'll be Europe or Japan, one or the other. I mean, it's going to be one or the other. I don't.
Does that give you a view on the dollar, Nick?
Yeah, I'm bullish the dollar. I've been bullish the dollar for since January. In fact, I'll show you guys a chart. I got long the dollar right here. Right here is where I was long the dollar. And excuse me, let me get my dollar chart up. Excuse me, January 25th, I got long the dollar right here. And I'm out of the dollar actually at the moment, but I am looking to re-enter the dollar around 92.50 on the index to 91.50, somewhere in here, just pattern pending. But I'm bullish on the dollar going forward. Okay,
and part of that will be when China makes a deal with us, because they are taking the yuan down during this trade war. I mean, no one ever called them a currency manipulator, but they are using the yuan in this trade war battle.
Yeah. So here's a story too, just to get to that. So, as a trader, I've told my traders back here at 630 was where I told them they could get long. And here was my target. So we got the 660. Now we'll let the consolidation move happen. And then this is going to go over 7. So this has a lot more upside, but right now it doesn't. And this is, this is the chart of the yuan. So
this is the depreciation of the yuan happening during the trade war.
That's right.
So they're going to use every tool.
They're doing it already. And, and you just see what's happening in the Shanghai. That's telling us the whole story, what's going on. And again, like I said, This has to go all the way down here before things are settled. So we still got, roughly 300 points of downside in the Shanghai Composite. And then you'll start to see deals getting worked out. It's not going to be because this is a daily chart, but really the pattern
Well, that's
is
a
playing out on
measured
a
move.
monthly.
If you take it from the breakdown, that would be the measured move that we had on, I think it was your daily chart. It was like a descending triangle failure that it broke down at 3,000.
So here's the monthly chart just to get the big perspective of it. And you can see, the Chinese market peaking in 2015. And now we're going down, we had that big thrust here, and then we had what we call an inside bar pattern here. And now we're going down into the 200 again. And look what happened the last time we went down to the 200, right? It held. See how it held in going back to 2014. Then it rallied up again. And we're going to see the same thing once again. So I believe this is just a repeated pattern. The Chinese are very, very smart people. I believe it's the one government that uses technical trading. So these guys know they don't want that 200 to get breached on a monthly basis.
That's going to be interesting to witness. Thanks for calling our attention to it. Nick, you see anything, people, it's pretty weak, bleak looking picture. You're bullish the dollar. I assume you're probably negative the gold and anything related to precious metals. Is that correct?
Well, that is correct. Right now, the gold chart looks terrible. I just don't see gold really standing out at the moment. And, I do think gold is going to have its day in the sun. Don't get me wrong. But when I look at this chart here, and I'm just pulling up a daily chart, we're just constantly, getting minor rebounds and then we go lower. Right now, I think gold is poised for a minor bounce, and that's all I can see. I don't see anything major. Even if we rally back up, I don't see gold breaking significantly higher. When you look at this monthly chart of gold, and believe me, Dale, I own gold bullion, I own silver bullion, I have for years. So, I'm not bearish gold, but what I am is I'm just a realist, in that we've been in a range bound chart pattern for a while, but that's okay. This is just building, a potential longer term base. And then, maybe it can pop out. But one thing I will say about gold is that, we had the 1999 lows. This is just a common retrace after a monster bull run that, lasted over 10 years. So to see what it's doing here is not bad. Gold will have its day in the sun once again. It's just not right now.
Okay, well, the world has changed since I last talked to you. So you know where I'm going, right? Bitcoin and crypto. Do you pay attention to it? Is it, what's your view on it? Do you trade it?
I have not traded it yet. I am starting to pay attention to it. So, we have now Bitcoin is now here, and, it's just not enough data on that futures chart for me to work off of. And that's why I really have left it alone. But the reality of it is it's okay. If I have to think that all world governments are eventually going to want to go to a cryptocurrency. And that's why they're letting it hang around, or else they would probably shut it down. And the reason why they're going to want some type of cryptocurrency in the future is so that they could, raise taxes. I mean, look at Europe. I mean, they tax you on everything. So the bottom line is cryptocurrencies are probably here in one form or another. And I think the central bankers around the world are watching it closely and seeing how it works out, and, basically taking inventory of this experiment. Personally, I'm not a personal fan of cryptocurrencies, but I'm a realist, and I take whatever the world gives me, and, I accept it. So, I'll be watching this market closely. Looks like the blockchain technology is something that's probably very prominent and here to stay for a while. So, that's something. But as for these cryptocurrencies themselves, I am not a trader of it yet. But if we get, good chart setups and it looks legitimate on the charts, then, I would trade it.
Okay. Well, another great conversation, Nick. Let's not let as much time pass as we did before today. So I really appreciate you sharing all your insights and with clarity and conviction. And I wish for you and everyone you're associated with to have a great summer trading season.
Thank you, Dale. And it's great to be back, and it's great to hear you're doing well. And God bless as always, buddy. Thank you.
Thank you, Nick, my trading warrior brother, Nicholas Santiago. You know, Nick, are you still with me?
Yeah, I'm still here.
Why don't you show your website so people know how to get a hold of you? The company's Twitter handle is at ITMS, in the money stocks, at ITMS.
Yeah, so I'll just put that the site up there so everybody can see real quick. It's inthemoneystocks.com, and again, come on over, check us out, and you'll see everything that we do there. And here's just a lot of our free market action right on our Rant and Rave blog, and we put lots of setups out there. I put a morning video out every day and give some trade levels for day traders as well. And again, we specialize in swing trades in our research center. We have our day trading service, and we've been around now over 11 years, so it's going strong.
I encourage people to follow Nick. He's a pro. Good luck, my trading warrior brother. Thanks, Nick. And everyone check Nick out. He's really got a great eye. Thanks for your time today, buddy.
Thank you, Dale. Thank you again. Have a great day.
Say hi to your partner for me and everyone. That's a wrap. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Thank you, Blake and Steve and Stelios and the F8 team and Nicholas Santiago. Adios, everyone.